Hey, Blueprint Nation. For years, we understood the hierarchy. Banks provided the money, and SaaS, software as a service, provided the tools. But today, that line is collapsing. Look at Shopify, Toast, or even MindBody. These companies are no longer just selling software subscriptions. They are offering loans, payment processing, debit cards, and credit services directly through their platforms. SaaS companies are secretly becoming banks. This isn't a side project, it's a massive, multi-trillion-dollar strategy known as embedded finance. It's the next evolution of the FinTech revolution, creating opportunities for entrepreneurs, investors, and innovators to build the next generation of financial services. The reason they are doing this is simple: money is the ultimate feature. By controlling the cash flow of their customers, they achieve maximum stickiness and unlock staggering new revenue streams. Today, we're dissecting this seismic shift. I'm giving you the blueprint for understanding why your software provider is evolving into a bank, and how you can capitalize on this trend, whether you're building a SaaS tool or investing in the next big thing. To understand the power of this shift, look at Maya, a dedicated entrepreneur who runs a successful, niche jewelry subscription box service. It was the holiday rush, but a critical shipment of materials was delayed. She needed $15,000 to rush a new order, but she had zero time for a traditional bank loan application. The delay would cost her the entire season. As Maya frantically logged into her SaaS inventory dashboard to check stock, a small, personalized notification popped up: pre-approved inventory boost loan, $15,000 available instantly. Repayments deducted as sales come in. The loan was tailored to her exact sales velocity and inventory levels. Maya realized the profound shift. The bank saw her as a risk on paper, her SaaS platform saw her as a predictable cash flow. The software she pays for was now acting as her financial lifeline. She clicked accept. The funds were in her account in minutes. She placed the rush order and saved her holiday season. She calculated that the cost of the loan was significantly less than the cost of friction, the lost sales, customer churn, and time wasted dealing with a bank. The speed and integration justified the premium. Myth: SaaS companies are becoming banks because they want to compete with the biggest financial institutions. Truth: SaaS companies are becoming banks to increase their average revenue per user, ARPU, and customer retention. Banking services are high margin, sticky revenue sources that make the core software subscription almost irrelevant. Maya's success wasn't accidental, it was the result of a deliberate strategy by her SaaS provider. Here are the 3 core advantages that allow SaaS companies to quietly take over the financial sector. Step 1: Data superiority, the underwriting edge. SaaS platforms have the best, cleanest, real-time behavioral data on their users. Action: they use this data to perform predictive underwriting that is far more accurate than historical credit reports. This edge allows them to lend faster and with lower losses than legacy banks. Step 2: zero friction delivery, the ultimate feature. For the customer, the service is native. The loan offer appears precisely when the customer is ordering new inventory. Action: the key is contextual delivery. Financial services are offered as a feature that enhances the software experience, not a separate product. This low-friction, embedded experience guarantees high adoption rates. Step 3: vertical-specific financial products, the niche advantage. SaaS companies operating in a specific industry can create specialized financial products that traditional banks cannot. Action: a gym management software can offer a revenue-based loan based on recurring membership fees. A construction software can offer invoice factoring tailored to material delivery timelines. This niche specialization creates financial solutions that are perfectly calibrated to their customers' cash flow cycles. Here is your quick business/cash flow hack for entrepreneurs: the service embedded payment hack. If you run a service business, consulting, agency, coaching, stop sending separate invoices. Embed your payment system directly into your booking link or final deliverable. Use tools like Stripe or a specialized vertical solution. This reduces payment friction to zero and is the simplest form of embedded finance for a small business, drastically improving your cash flow velocity. Now, let's talk about the economics that fuel this revolution. The subscription revenue for a typical SaaS product often has a gross margin of 70 to 80%. But the revenue from an embedded lending product can reach a 90% profit margin because the infrastructure is already built, and the customer acquisition cost is zero. They are already using your software. This disproportionate profitability is why investors are rewarding embedded finance companies with higher valuations and fueling this trend. The biggest factor driving adoption is the customer experience. Traditional banks force customers to leave their workflow, fill out complex forms, and wait days for a decision. Embedded finance delivers the financial tool in the moment of need. For Maya, the integrated loan meant hours saved and the season saved. This radically superior experience becomes a competitive weapon that legacy banks simply cannot replicate, binding the customer to the SaaS platform forever. This shift flips the competitive landscape on its head. The real competition is no longer between your SaaS company and another software provider, it's between your SaaS platform and a local bank. By capturing the financial needs of your vertical, you create a powerful defensible moat. Customers won't switch to a competitor, even for a slightly cheaper subscription, because they would lose their immediate access to capital, their integrated payment flow, and their financial lifeline. For investors, this trend represents a flight to data-rich assets. Companies with high transaction volume and clean customer data, like Shopify and Square, are being valued not just as tech companies, but as powerful financial institutions with proprietary data wells. They are essentially selling a lower margin product, software, to identify, underwrite, and monetize a higher margin product, finance. The next great wave of innovation will be driven by specialized BaaS, banking as a service, providers. These are the white label platforms that handle the complex regulatory and technical burden, allowing any vertical SaaS company to offer a specific, tailored financial product in weeks, not years. The real money isn't just in running the bank, but in selling the financial plumbing that enables thousands of vertical software companies to become banks. Finally, understand that the convergence of commerce and finance is total. Every business that processes money or manages inventory will eventually have an embedded financial layer. This isn't just for billion-dollar companies. If your SaaS tool processes $100,000 in transactions annually, you have enough data to begin offering profitable, embedded financial services today. The opportunity is truly democratized by the new BaaS infrastructure. Embedded finance is redefining who holds the power in the business world. The banks of the future will look like software companies. Maya's business scaled rapidly, fueled by instant, data-driven capital. To help you apply this trend, whether you're building a SaaS platform or looking for the best financial tool, I've created a free guide, the Embedded Finance Watch List, 5 non-bank companies you need to understand. It details companies leading this revolution and the specific financial products they are using to dominate their markets. You can download it right now, the link is in the description below. Stop seeing banks and software, start seeing integrated financial power. Now, I want to hear from you. What is one non-financial SaaS app you use today that you wish would offer an instant financial service, and what would it be? Share your idea for the next embedded finance opportunity in the comments. Hit that like and subscribe button to keep building your blueprint for profitable innovation. Remember, follow the data, and you'll find the money.